Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, a few minutes before we get the pre-open rates, a good time to get in some derivative strategies. Manoj Murlidharan joins us to help us out with exactly that. Hi, Manoj. Good morning. How are you reading trade setup, and what are the strategies you have for us?
Good morning, Nigel. Nigel, I guess there is some serious data we need to understand. And I guess this has started from the time we saw the series or the expiry start from the rollover happened from Feb to March. Now, there are two things. If you see the last couple of days, the Nifty has been correcting, but the IVs are down. And if you look into the volatility index, it usually takes a reading 5 days before expiry into the next contract. So the VIX of 15.4 that we see as of now, that is using an April option into consideration, and that is not really your March series expiry. And the second most important thing, if you remember, when the HDFC bank and the merger news came in, and I guess we saw the positioning happening in the bank Nifty was a huge, almost 30 odd lakhs. The average is usually 20 lakhs. Even now, the rollover percentage in the banks are a good 64%. And if you see, the April series is already with 22 to 23 odd lakhs. Now, this has happened last 10 to 15 days. If you go back on a bow copy and you just check that, the positioning in the April and May has already started when the bank Nifty was closer to 40,000 odd. And I feel that it is just a matter of time into this expiry that the bank Nifty might surge ahead for a good 1,500, 1,800 odd points. I was listening to Anuj, and I guess there is a possibility that might be on the upside, if not on the downside. But having said this, the Nifty has still been in the range of, let's say, 16,800 to 17,200. So we would say that with the closing stop loss of 16,800, the Nifty also looks positively biased because surprisingly, I believe that IT as a sector for the first time, even yesterday and a couple of days, we are looking into the cash positioning and the derivative data. There is a possibility the IT stocks and the banks can surprise on the upside, and that might give us a positive bias. So we are positive on the Nifty, for the Nifty and the bank Nifty. The target here would be at least 40,800. The stop loss would be 38,800. For the Nifty, 16,800 as a stop loss and 17,250 as a target.
Okay. By the way, the pre-open rates have started coming in. It's kind of flip-flopping between negative and positive, at least for the time being. Sun Pharma right now is showing about a 3% pop. Reliance is showing a 2% up move. Not quite sure if this is how it will play out. HDFC Life is showing a 4% cut. So let's just wait for things to settle a bit. Pretty flat at the headline index level for now. Manoj, stock calls, what trades are you going with?
We'll go with three stocks. One is, I guess, Infosys at 1360 to 1380 is a good base formation, and we believe once a 1404 is breached, we would see a good short covering rally, and the target for this on the upside would be 1440. So Infosys becomes a buy with a stop loss of 1350. The second stock is, we believe, HDFC Bank. There is more upside left. The target should be somewhere close to a 1620. So 1545 as a stop loss. That would be a long position on HDFC Bank as well.
Okay, all right, Manoj, got that. Thank you very much. We'll quickly look at, of course, the street view now that we've had a whole 2 days of a weekend to digest the developments with respect to debt mutual funds. Digant Arya, co-founder at GreenEdge Wealth.